Hello, Harry. How you been doing?
How's it going, Pete? We
Things are
good?
good. We got a market that's moving. We've finally seen a little bit of selling pressure, so we'll be able to talk about that. Take a look at the market right now. You can see how the S&P 500 sold off hard yesterday, sold off this morning right out of the gate. Decent volume, and got a nice tall bounce in here. So you had to be careful shorting this morning, and might as well talk about what played out in the chat room. I was short Nasdaq futures overnight. Kind of watched the overnight session. I suspected we could see some follow through selling today, but when I came in overnight, futures really hadn't dropped very much, so I didn't feel the need to have a hedge on for a Tesla position I'm currently carrying. I'm holding that bag. But as the day unfolded, we saw very quick selling pressure right in here, but you can see that we had some reprieves. So retracement into these long candles. Have to be a little bit more careful on long candles. Again, retracement. Now we've got a marginal new low, and we've got some compressed tiny bodied candles here with a bullish 1OP cross. This is where I exited futures. I took a short position this morning, small gain on that. And I had mentioned that I was kind of looking at NVIDIA as a possible long if we got a nice, decent market bounce. I was looking for a couple of green candles and then a nice long, not a solo. And this is where I got long NVIDIA, and I took gains on that. Might as well take a look at NVIDIA. My reason for it was that I was seeing relative strength in NVIDIA, and they have earnings next week, well above the 50-day moving average. Look, compared to the bloodbath in tech, NVIDIA's been holding up well because who's going to short that stock into earnings? Not many people. So I got long in here, took gains in here for a quick little trade. So kind of what I saw in the market
Yeah,
this morning was
I was just going to say I took quick profits this morning. I went overnight with a nice short on Meta, and Meta had a nice drop on the open. Capitalized on that and took almost 50% profit on the put debit spread that I had there. I took it when Meta was down around $15. It's now down around 10 or 11. It popped back up again, but and then I've recently just took a nice short on Marvel. I got Marvel off the ice cold. Search there on Option Stalker, and right now Marvel's just about even on it. Just I shorted at 69.59. It's been bouncing around, but it's been bouncing around with the market at the moment. So hoping that this test of VWAP fails on SPY and that we continue back down, and I can close out my Marvel trade before the end of the day.
very nice on the Meta overnight short. That worked out really well. And yeah, so I am still looking to short in here. I want to see what happens when you get a bounce like this. It tells you that a bloodbath today is less likely. You can see we've got a bearish 1OP cross right in here. So it also is looking at possibly getting short in here. So we're floating around VWAP. This was persistent selling that we saw yesterday. Finally, market tries to rally up and it gets smacked down pretty well. This still was not what I would say daunting, because you had this new low of the day, and this was a support level that we had tested a number of times here. You can see around that 242, 642 level on SPY. So when we flush out of those support levels, you're going to see some long red candles. So we were expecting that because those are triggering sell stops. And what happens after that is what tells us if we're going down or not. Well, this is kind of patchy, chunky price action, but eventually we start working our way down. This is where the selling pressure got very persistent, and we had decent volume in here. So this is where it was pretty apparent that the market was going to be in a gradual drift lower. Nice, steady, persistent selling. But apart from that, we haven't seen any selling pressure. And that's why I suspected that this drop, this quick drop this morning, was probably going to find some buyers. So now that we've had that sell off, we know that the path has been cleared to move lower. We also know that buyers are marginally engaged still. So let's see what happens in here. If I see a futures trade setting up, I'll take it.
I'm eyeing PLTR as another short as it tries to get through the 50, the 150. It's at 152.57. One thing I want to warn traders on is this thing I'm going to just call mindset projection. And what it is, and PLTR is a good example of this. So you look at PLTR, right? And obviously this Citron comes out with its short report, and ever since then PLTR has gone from 190 and now it's all the way down to 151. And so you look at it and you think traders are going to be looking at this and saying, well, this thing has dropped $40 in the last 4 or 5 days. At some point, they're going to buy here. You're projecting your mindset onto other traders, and you may be right. Retail traders at this point may be like, this is the dip to buy. But this is clearly some serious institutional selling going on in PLTR. And you have no idea what the target price on the institutional selling is. So, for example, institutions may be looking at this, whether they agree with the Citron report or not, and think, we're going to come in and buy this stock again at 131, which is the 100 SMA, right? And they're going to keep selling until they get down to the price that they want. At that point, what retail traders do or do not want to do on buying the dip doesn't matter. It's going to be driven by an institutional plan as to what their target price is, where they want to come back in and buy. That may be, and as traders, we're technically driven. We're going to assume that those levels are technical levels, right? That they'll buy it at, they didn't buy it at the 50 SMA. They'll buy it when it gets to the 100 SMA. If we see it bounce over the 50 SMA here and sustain, then we know, okay, the target price for institutions was the 50 SMA. But to project your mindset of this is the dip that retail will buy, you're ignoring the fact that retail has very little to do with what's going to happen with PLTR. It has everything to do with what the institutions have in mind for PLTR right now. And that's where, if you follow the price action, what you're looking for here is, does the SMA 50 hold now as resistance? It was support. And if it does, that puts the SMA 100 into the target as the next possible area where institutions will step in. So it's just something to keep in mind as you look at it. And a lot of gut reaction from retail is, this is a good time to buy PLTR. Why don't you wait to see if the SMA 50 holds here?
Yeah, really good point. There are a number of different points, some with PLTR, some with the overall market, your mindset. So let's take a look at PLTR. And if you were long PLTR and all of a sudden you got this big drop right in here, you have to ask yourself, and what gives you confidence on a longer term swing basis to hold a stock like that is that, are all of these buyers that we've seen for the last 4 months, are they wrong? Because this is really nice, tight price action. And you only get that when buyers are aggressive. They're showing their sense of urgency, they're bidding the stock up, and they're taking a long position. So a lot of times you'll get this nice big sell off. And this is exactly when most retail traders will puke out of their positions. Well, you have to hang on to a position if you've missed exiting up in here. And you do so on the knowledge that this is likely to have a double top lower high. These buyers are not going to go away quietly. Somebody sees value in this stock. And so when you get this failed attempt to get back to the previous high and the stock starts to stall out and it rolls over and you start to see relative weakness. So it's not just PLTR, it's weak relative to the market. So now all of a sudden you've got that lower high double top. That is when you can have a longer term swing short on. And to the same extent, I've had people asking, and I know this is tongue in cheek, trying to be funny, Pete, when do I get the green light to short? When do I get the green light to short? it's not going to be until we have a drop that's deep and fast. Okay, that's the first step. We know sellers are out there, we know they're aggressive. Then we need to see that wimpy bounce. And that wimpy bounce tells us that sellers are still there. Then we get that lower high double top. Then we roll over and crack back down below, say, the 50-day moving average. Okay, now I finally have confirmation that the market is going to roll over because every other little dip in here, this one, they bought the hell out of it and you lost money if you shorted this little thing. You lost money in that. This little thing, you lost money in that. None of these dips materialized into a sell off. These were buying opportunities. And so I know a lot of people, myself included, Harry included, have been waiting for that freaking sign that sellers are finally in control. We haven't seen it yet. Okay. Could we get it
Yeah, I haven't either.
this week? Could we get it this week? Maybe. But could you have this thing rammed right up your butt? Yeah, because that's what happened on every other dip. Do we have seasonal weakness? Yes. We have all sorts of crappy things happening as far as global economics right now. Yeah, the market hasn't really paid much attention to it. So we've got to wait for that technical confirmation. It's not what we think is going to happen, it's what we see happening that matters.
I mean, to me, this is a normal sell dip here, a little more aggressive, but because it's second day in a row, but certainly not the dip that everyone would be talking about. I mean, when you're talking about the dip of that magnitude, you're looking at a 5%, 10% correction in the market type idea. Um, and everyone talks about how the market's overvalued and all that. You got to imagine there's only certain things that can drive that level of institutional selling. Obviously, prime bond market, right? The bond market is 2 to 3 times larger than the stock market. On Liberation Day, the bond market sent a very clear signal: hey, too much, too far, and that's you got that huge back off, and it resulted in that pop. But the bond market woke up and shot up the yields, and the market just instantly responded. So yeah, I'm keeping TLT on my radar. You see in the last 2 days though, we had some nice drops in the market, but TLT really hasn't gone anywhere. It's not like you've gotten this huge move in bond yields. The Fed is another thing that can move the market. Everyone expects those rate cuts in September. There'll be a lot of attention paid to Powell. I still have that memory of Powell at Jackson Hole was it 2 years ago, Pete? Three, where he
It
came out and
was.
just blew the market out of the water. Um, and so right now though, there's been no indication one way or the other that's different than it was on Friday for, let's say, on the Fed. And then tied into the Fed, obviously, are recession indicators. And recession indicators, certain ones are blinking, right? You obviously have that PPI number. You have the housing number that came in yesterday. That's one of the 10 economic indicators that go into a recession index. So there are some concerns there. But again, that, it's not like it's on red alert. So until I see something major moving the market with that type of price action that we talked about, these right now are your normal, healthier, much healthier for the market than what we saw in the last 2, 3 months. Pullbacks that, for the moment, continue to get bought up.
You brought up a great point. You always have to look at your news windows that are coming up this week. Very dead. We do have FOMC minutes this afternoon, but they're not going to be reflecting that hot PPI number because the FOMC meeting was way before that. So those comments, I think, are going to have to be taken with a grain of salt because everybody's going to be reassessing what they had to say based on new information. Powell's speech on Friday is going to be big, and the market's priced in a rate cut in September. And you look at the D1 chart on SPY, and I know that everyone's thinking, oh my gosh, the market's rolling over. It's rolling over. Here's the big one. This is the one I've been waiting for. And then Powell comes out Friday morning and goes, yeah, we're probably going to cut rates on in September. What do you think the market's going to do then? It's going to race right back up, and you are going to be royally screwed if you've got a bunch of short positions on. So I hate doing it myself. I know nobody's happy trading this light volume drift higher, but we've got to wait for movement one way or the other, news one way or the other. If he comes out Friday and says, "Hey, we might not cut in September. This inflation thing's got us concerned." All right, we start to sell off and we start taking out AVWAP E, AVWAP Q, and the 50-day moving average. Now we've got something to lean on.
Yeah. I mean, the only difference I see right now in this price action on SPY is it's been a while since we've had 3 out of the last 4 days being down, right? Normally you get a down day, then you get a bunch of up days, or you get a rare maybe two in a row. But we've had now last Friday negative, but Tuesday negative, Wednesday, and then Monday, to be honest, was sort of a doji. So 4 out of the last 4 days have either been flat or down, and that's slightly different than what we've been seeing. Does that indicate that I mean, I agree. I think that the market is in a, well, we're certainly not going to be buying like crazy until we see what Powell has to say at the very least. And then obviously you have Nvidia earnings in a week. So there are some potential movers ahead, and obviously the market has put in a huge bullish run. And right now it looks to me like it's taking a breather, but you'll know a pullback when you see it. This is not a pullback. A pullback is high volume, unrelenting. I mean, we're talking, you're down $8, $9 on SPY and it's still dropping.
Yep. And this is a marginal new high right here last week. So we barely broke out. And that was on the CPI number, if you remember. So CPI comes out
Hmm.
good and the market makes a new all-time high. PPI comes out 2 days later. Awful number, horrible number. Market shrugs it off completely. Go figure. That day kind of surprised me. So one thing along those lines that you want to bear in mind is that typically when PPI goes up, there's about a 1 to 2 month period until those higher prices filter through to consumers. So next month and the month after, watch for possible high CPI number.
Yep. Someone's going to get fired for it, but I'm sure.
I had a question
I'm
on when
sure
I
we'll
got
see
out
it.
of
It's usually a precursor.
I had a question on when I
We
got
got
out
some
of
questions
AE.
here.
Yeah,
Oh, what?
AEVA. When
Sorry,
did I
please.
when did I get out of AEVA? The puts that we sold on that expired worthless. So the stock rallied just before the earnings, or excuse me, before the options expiration, and they expired worthless. So I never took possession of the stock.
By the way, that is for those of you who don't know, when you sell a put and it expires worthless, you are keeping 100% of the profit as opposed to buying an option. Just hopefully most of you know that means that Pete was profitable on that trade. Although when you sell a put, you generally, and we say this all the time in the chat room, put selling is a great, particularly when you have some nice high premiums and you have some really good support levels, is a great way to make what's called, passive income. But you always should be prepared to take possession of the stock. You have to be able to look at it and go, I like the stock at that. I would not mind, let's say you sold a put on a PLTR at, 150 and you got $2 for it. What you're basically saying is, I don't mind owning PLTR at a price of 148. Like, I'm good with it. And you're not unhappy if you get assigned the stock there. You're obviously not unhappy if you collect the full premium either. But that should be your mentality going into selling a put, which is you want the stock at that price, but you'll take the premium, but you're not going to be upset if you get assigned.
I've got a chart of AEVA. Love this nice tight price action in here. Stock was getting well above the EMA 8. This is where I decided I would sell an out of the money $30 put on the stock. And it was with the expiration right in here. The stock rallied up and the puts expired worthless. Hindsight now, well, once this option expired, we're too close to earnings. We're like a week away from earnings. So there was no put writing ahead of an earnings announcement. You would only want to make sure and do that if the options expire before an earnings announcement. We don't hold positions over the number. So now you get your earnings announcement, look out below. So stock is starting to find its footing here above the 200-day moving average. There have been buyers in it. So would I consider selling an out of the money put down at the 200-day moving average? Sure. It needs to continue to show me some relative strength. I'd like to get through the Powell speech on Friday, make sure that the market is still on sound footing. And then, yeah, I definitely would consider doing that, especially when the IVs are still fairly rich at 1.09.
Gaming with the Birds asks, he took a Apple short, I'm guessing earlier today when there was a doji off of VWAP. Basically, was that a good trade, bad trade? I like the Apple short here. I do. It's still showing some relative weakness as SPY is popping and above VWAP, and Apple remains below VWAP. It's still above its EMA 15, which is at 224.20, and then you have its EMA 200 at 221. So you got around uh, $3 to your first level support, and then maybe $6 to your next level support there. So I just keep an eye on those. But if you're looking for a tech stock today that's relatively weak, um, that's not a bad short. I think it's fine. I think you entered fine, and it tried to test VWAP again and it failed. And even though the market's been bouncing a little bit, Apple's not really bouncing with it. So compare that to Google, for example. Google has been bouncing up to its 200 price point. And yes, I am long Google from the other day, but Apple shows the opposite price action, right? So Google is something that's not relatively weak right now with this bounce, whereas Apple is not recovering.
And yes, I took a Tesla long yesterday that I'm munching on right now. And pretty much after I got in, the stock cratered. I am hanging on to it. Why? Oh my God. The stock is below the 200-day moving average. How can you be long this stock? It's below the 50-day moving average. Where is this stock? It's in this freaking wedge right here. If I zoom out, you can see it's in a wedge pattern here. It's gone across the 50-day and the 200-day moving average at will. When you have that happening, those support and resistance levels are meaningless, absolutely meaningless, because they've been traipsed over 100 different times. So they're irrelevant at this point. What's relevant is that wedge formation right here. So, yes, I'm still hanging on to it. I did like the fact that the stock had moved a little bit higher. It had found support at the 200-day moving average, looked good early in the day yesterday. It had good volume. So I'm sticking with that position. It's my only, let's see, I'm long Tesla, I'm long BULL. So those are minor starter positions. And I do have a put sell that I want to show you, SOUN. And yeah, stock is pulled back, but I'm okay with it. It was all part of my initial plan. So this is SOUN. I'll tell you why I liked it. It had nice option implied volatilities. It had a very good earnings reaction. Stock broke out post earnings, and that's horizontal resistance there. There's your earnings announcement right in here. And so, would I want to buy the stock at that breakout? If the answer is yes, then I can sell out of the money. $13 puts in this case. They expire a week from Friday. I sold them for, I believe, 40 cents, maybe 30 cents. In any event, that would represent a 5% return if I am not assigned and the stock closes above $13 a week from this Friday. That's decent. And if not, and I get assigned, I'm okay owning the stock at a net price of $12.70. It's at 12.51 right now. No big deal.
Let's see here. Do you have any advice for those who can only trade the afternoon session, last 4 hours, pros and cons? Well, I've been talking about in the chat room. My son has Nicholas. He's 20 years old, going to be a junior at Berkeley in fall, and needed a summer job. So, he learned how to trade from me and decided that he was going to do part-time trading over the summer. And it's a small account, it's a college level account, like $5,000, $6,000, whatever. And he has 17 trades, I think, this summer, 16 in a row profitable. His only open trade right now is a Google long, which he's underwater. So that would be his only loss if that does wind up being a loss, but that option still has a week and a half to go. But 16 in a row, and he's made more off a $5,000 account trading than he would have at any part-time summer job. And here's the thing, being 20 years old and off for the summer, kid wakes up at 11:30 in the morning in the Pacific time, so it's 2:30 on Eastern, and takes a look, checks out the scans on Option Stalker, comes up with some trades, makes a trade or two, spends about 45 minutes, an hour on it, and he's out, and he's doing great with it. Is it possible? Yeah, you're talking about being a kind of part-time swing trader is more what you're looking at if you're doing those type of hours. It's kind of hard to do day trading when you're that restricted on your hours because particularly if you're doing it towards the end of the day, you're not giving yourself much leeway if a position goes against you and you intend it only as a day trade. But yeah, it's perfectly possible. Just focus on honing your swing trading and honing your stock selection and the type of swing trades you're going to do.
100% agree with everything you just said. In fact, the last 4 hours of the day are really when you're watching what the market's done through the course of the day. You're watching the stock relative strength. You can monitor your positions. When you have a swing trade on, outside of taking profits in the first half an hour, if you happen to get a really nice winner, hopefully you're able to do that. But otherwise, you're really making your swing trading decisions in the afternoon because now prices started to settle down. You're starting to see if those early moves are legitimate, if there's follow through to them. So, sets up very well for swing trading.
What do we think of AER, Pete? I like AER. I mean, there's a little bit of a upward sloping trend line there that comes off of the top of 812. It's not a huge trend line, just like two or three touches, but um, I like the price action here on AER. I like the daily movement. It's at the high of the day today. Obviously, it's relatively strong. Nice break of the 50 SMA, and then it doesn't look back. There's not even any retracement here. So, as far as if you're looking for longs right now in this market, AER is certainly a good choice.
Yeah, really nice. Very nice.
All right, it's a pretty nice chart.
So yes, I'm trying to. We could take a look around. Well, first market. So you get this check of VWAP right in here, and you can see how it had this big drop. Now the market rallies above VWAP. You've got a higher low double bottom, and you took out this resistance level with ease. So these are nice candles. The market looks like it's poised to continue to move higher. This is what we would call a bearish cross and a bearish cycle. And you can see from this point here that the market's actually higher. So this is at minimum a benign cycle. And it's possible that this could be a bullish divergence, which would indicate higher prices.
And that goes to the question right there, which is, let's say you're focused mainly on shorts today. How much, less or more willing would you be to go short after consecutive green M5 candles from 10:55 to 11:30 a.m. on SPY? Again, this is where relative strength and relative weakness comes in, right? So if you're talking about Apple, I'd say, oh, this shows me, it solidifies to me that Apple's a good short. You have this nice pop above VWAP on SPY, and when SPY pulls back, Apple certainly drops, But whenever SPY goes up, Apple's not really going with it. Again, compare that directly with Google, right? Google driving higher right now with the market, whereas Apple's not going anywhere. So, but if you're looking for, those momentum shorts that need the market to push with it, then yeah, you might want to change your focus a little bit here and see what stocks really recovered, like the Googles or Nvidia here, and look at the D1 chart, look at where support is, and is it for minimum a good day trade right now on the long side. But these type of pops, whether it continues and we wind up with a bullish run here or it reverses, gives you a very good opportunity to see which stock is really weak here and which ones were only weak because the market was down.
And so we have a search. It's called Relative Week 30. What's the market done in the last 30 minutes? It's rallied. Okay. Show me a stock that has been weak for the last 30 minutes so that the market is going to be rolling over here. Show me something that has not been able to get off the deck. And so this is our list, and we'll take a look at some of these stocks. You can see Home Depot earnings yesterday.
FTX,
Stock. I'm sorry.
Home Depot, all right. Home Depot and FTX. Sorry, I was looking at the list.
Yeah, so Home Depot, you've got a stock that's continuing to drift lower. Look, the market rallied. What did the stock do? It's still on its low. And in fact, it could even fill in this gap in here. But yeah, this would be a decent stock that you might consider shorting if you had the D1 chart in agreement. So you'd want to make sure that the stock is either bumping up against major horizontal resistance. In this case, it isn't. Home Depot is trying to make a new relative high, but DHI is another one we can take a look at. That is a home builder. And it's starting to get a little toppy, but not anything technically that we can get behind. Adobe has been weak for about the last 2 months, and you can see this could be a bearish flag, excuse me, setting up. There's your flagpole. There's your little bounce. It's rolling over. Take a look at the M5. Could be a good short. You saw the resistance, a 50-day moving average and AV-WEPI. There's your short right there. Okay, if you're looking for a short right now, wait for the market. Got to make sure that the market is exhausted. Adobe is going to be a really good short in here. This is going to be my short pick because, yeah, I would definitely let me make sure on earnings because Adobe is one of those latecomers that announces in kind of a weird cycle. So earnings are 9/11, plenty of time. I would be looking to short Adobe, and you can see there's the 50-day and AV-WEPI in the stock, not able to get above it. Today, it's selling off pretty hard.
Let's see here.
See how easy that is? I mean, Option Stalker, I designed this platform to trade this system. All the searches are designed to trade this system.
Let's see. Watermelon. Watermelon, if you are studying for your PhD there, then you're never going to get done. You need to be writing your PhD, not studying for it. You don't study for a PhD, buddy. All right, let's see here. Someone's asking about Berkshire Hathaway. Seriously, you're going to trade a $700,000 stock? Okay, good luck. I mean, sure, it's bounced above its 200 SMA if you want to, go long. But let's see, Adobe. I agree with you, Pete. That is a very good short. I like that short, and I also like FDX. FDX, I think, is a good short here. Continued drop, not really much of a ease off here. It's just dropping through the SMAs. It does have the 100 SMA at 223, but you got $5 worth of downside there to contend with to help you out on that short. So I like FDX. I like Home Depot. I mean, if you're looking for a decent long, Costco. Costco is not a bad long. McDonald's and Costco. Both of them. McDonald's today actually is one of the better longs on the D1 chart, and overall. And why not? With when you have things like a McDonald's and Costco, those are also whether it's makeup stocks, alcohol. Uh, these are all kind of recession flight to safety type stocks. When things are bad, you go to McDonald's. When things are good, you go to McDonald's. It's kind of one of those things that are economy proof. But let's take a look. What do we think of AMD's TA and your thoughts on Intel, and talks about the 10% stake for the government? Well, I'm going to stay away from the 10% stake thing, but AMD right now is obviously bearish, and whether or not it tests the 50 SMA remains to be seen. It doesn't have any particular relative strength here when you compare that to a NVIDIA or a Google that popped with the market. But it's not as relatively weak as other tech stocks. I wouldn't touch AMD today. I don't really see a trade there.
That is a really choppy stock too. I mean, I've traded it a number of times, and it has a tendency when everything looks great, all of a sudden the stock changes its character and does an about face. So, got to be a little careful trading AMD. Although this has been finally a nice tight pattern. If you look previously, you can see how it's just been chunky, making these chunky moves. But now, yes, this is definitely a sign that buyers have been in this stock. I did buy the Adobe September normal expiration, 19th, September 19th. I bought the 355 puts at $19.10. I did 5 contracts. I just did a very small trade. Wanted to put something on while we've got the live event going. And I will swing trade that.
I might take I like Adobe. I might take a trade here on Apple, and I might go out to next week's puts and pop in. Let's see, around 15 of those, and there we go. Okay, so I just took 15 contracts of the 235 puts on Apple. They expire next week, August 29th, for $9. So I just short Apple there on using those puts. I like the relative weakness on Apple with this pop up in the market, showed me something. So I'm using the 235 puts that expire 8/29. Plan on swinging this for $9 a contract, 15 contracts.
What you'll notice is here he is typing like mad. That's because he freaking posts like to 5 different spots what he's doing. Takes an awful lot of time to do that, and it takes your attention away from what you're actually doing. So, I mean, nobody else posts their trades like he does. No one that I know of, anyway, publicly in social media for free. They're really good examples of what he's looking at and the positions that he's putting on. So dissect those trades, try and understand why he's taking the trade. It's tough to
And
trade and to do social media.
And when I post the position size, specifically because you can see every broker out there has time and sales, whether it is for the stock itself or whether it is for options. And so many out there are full of shit, and they're using paper trading, or they're just randomly saying, oh, I traded this or this. So when I post and say I took 15 contracts, I took 15 puts at this strike of this price, you can easily look in the time and sales of Apple and check it, and you'll see right there that yes, this trader took that position at that quantity, at that time, at that price. And the same thing with the exit. So there can be no doubt when I say, this is how much profit I've made or not made. And look, I don't fault anyone out there for wanting some proof, right? Because We're trying to help you learn how to do something, a profession, a career. And unless we can show that we ourselves can do it, and we have a long history of doing it, why take the advice, right? And that's why you can look in the chat room and you can see Pete's calls, or you can see my trades posted. And then you could check it. You could check it against the tape and say, did this really happen? Did they really do this? Did they really make that much money, or not, or lose that much money on that trade? And you have every right to expect that. Every right to expect that level of transparency with anyone you're going to follow. And so just keep that in mind. If you're out there and you're like, oh, I want to join this group or follow this person, particularly if you're going to pay them money to try to teach you, have some standard of proof. Have some standard of proof that they're actually doing what they said they're going to do, because, or that they're doing. Because if you're paying someone to teach you how to trade and there's no proof that they themselves are a profitable trader, then I don't know what to tell you, but you're wasting your money at that point. It's the bare minimum they should do is you should feel confident that the people that are teaching you have a track record and actually know how to trade.
I am looking to possibly short some futures in here. I like what I see. I've got this attempt to get back to the high of the day, and you can see this bearish engulfing candle right in here. Now we're starting to check this previous resistance level and come below it. So it's not a fantastic setup just yet, but that's kind of what I'm looking at. So I'm going to make sure I've got my order set up to do it. Back on Adobe. So INOD is a question. Would I short it here? I hate this choppy price action in here. Look at this. This is just garbage. This stock does not have a clean path forward. This is like trying to predict the flight of a bat versus trying to predict geese flying in V formation. It's all over the place. You can see how it's distanced itself from the EMA 8. That's not good, because that means that it could put in a nice big rally up to it. And now you've got these major moving averages that you're right on. So you want to try and not short when the stock has already made a decent move recently. And ADBE, you can see that it has been weak way before the market even rolled over. Look what this stock was doing, selling off. That's why all the major moving averages are above the stock right now. And look at how the stock rallied up right in here. Oh, look, ADBE, great short, great short, great short. So you start shorting it in here. Well, first of all, you had some major trend lines it was coming up to. So that's not a good idea. Way below the EMA 8, also not a good idea. And then you get short in here. And what happens? They ram this thing where the sun doesn't shine. And now the stock has rallied 20 points, and you're like, oh my God, now what do I do? Versus let the bounce unfold, make sure that those resistance levels are in place, and then look for signs that the stock, this bounce, is out of gas and it's starting to roll over. That's how you can take a position. And where would I stop it out? If Powell comes out and says we're cutting rates in September, and ADBE all of a sudden gets lots of strength and moves through the 50-day moving average, I'm going to take my loss. Otherwise, I'm going to stick with this position on the notion that it's going to come down and check this major support level.
Okay, let's see. How much do we factor Jackson Hole into our? What does that even mean? I don't know. What do you mean factor Jackson Hole into our trading? How would one factor Jackson Hole? The market makers are factoring it for us. They're factoring it in their IV on their options. All you have to do is take a look at the option IV, and you could just take a look at SPY's option IV, or look at VIX and see how much they're factoring it. I'm not going to be factoring any more or less than they are. I mean, to be fair, are there certain things that maybe I'll be hesitant to swing going into Friday? maybe. Is it possible if the IVs are low enough that I would take a strangle or straddle on SPY on Thursday night, going to Friday, treating it as sort of an economic number release event? Yeah, maybe. But that's about the limit of it. Other than that, I factor much more things like Nvidia earnings next week. When I'm taking trades next week, I'll be much less likely to swing tech stocks, for example, as those will get caught in an echo effect of the Nvidia earnings. It's a certainty that whether a Nvidia goes up or down, it's going to impact other stocks in the sector, in the industry as well. So, but Jackson Hole, no, like I said, I might be less likely to swing certain things on Thursday night, or potentially taking a strangle or straddle on SPY, although I doubt it. Uh, that's the limit of it. I'm not going to guess what he's going to say.
Yep. And so versus 2 years ago, you were short and you were rightfully short. You had reasons to be technically short heading into that release. So when the bottom fell out, I remember you taking some heat on that position. So you weren't necessarily trading Jackson Hole. You just knew that there was an event coming up. You were aware of the risks and you were willing to assume those risks, knowing that that is a
I
market
was.
moving event. So you just adjust your risk. You're aware of the information that's coming out, but you don't trade based on what you think the reaction is going to be. If you don't know, then you don't have many positions on, and you wait for the reaction and you trade because it's a binary event. You don't want to be in 50-50 scenarios. You want to be in 80% scenarios. And the only way to be there is to wait for that reaction to watch the price action, just as I pointed out on SPY this morning. And then once you see what's actually happening, then you can get your odds up to that 80% level and trade after that reaction.
And the what the hell are you talking about comment of the day comes from Cobain. Is Target a good long? Cobain, what the hell are you talking about? Uh, no, I don't think it's a good long. I don't think it's a good short right now either. I don't think it's anything at the moment. I think Target just had earnings. It's popped back up a bit, but it's been pretty flat. It had its chance to enter the gap. You get these long uh, candle spikes here, and wicks going all the way up, but it's not really taking advantage of the boost on SPY. I mean, look, if Target entered this gap here and crossed back over the SMA 100, even though it'd still be down for the day, I'd say, okay, maybe you can play it short term as a long on the bounce here. But there is nothing to indicate that Target is a good long here, other than the wow, it just dropped so much. It's got to go back up. That mentality just, I mean, I don't know how many times we could say it, just doesn't work. Talion, you can follow my trades in the OneOption chat room. You can follow them on Twitter. In the OneOption chat room, you get all the commentary that goes with it, obviously. But every trade is posted within 5 to 10 seconds of making it, whether it's on Real Day Trading, at Real Day Trading on Twitter, X, whatever the fuck you want to call it, or in OneOption. There's that nice drop on Apple. See how this, look, I shorted Apple. Market just started to pull back here. And what is the instant reaction on Apple? Bam, right down. And that trade is already doing really well on the options. So that is the relative weakness that we talk about all the time.
Yeah, I'm keeping an eye on futures in here. If they take out this level here, I'll probably end up
Yep.
taking a
Short
short
it.
on futures. And so there's your previous high. It's kind of a failed little breakout.
You
Didn't
short
get
an
anywhere
NQ or
close.
ES there, Pete?
I like shorting ES. It's just easier. I like the way that it moves price wise. There are times when I'll short NQ, but um, I'll just stick with ES, and they both tend to move pretty much in tandem. Sometimes you'll have relative strength or
They do.
relative weakness in one or the other.
Yeah, I agree. Um, and ES tends to, I mean, obviously ES is going to mirror the price action on SPY, vice versa. I mean, um, I'm hoping Marvel
So
breaks the VWAP here.
back to TGT. I mean, this is, everybody wants to buy low, buy low, buy low. Well, buy low doesn't mean you're buying well. This company has some serious issues, and a lot of the brick and mortar retailers do, to be quite frank. Look at this sell off. What's telling me that this is going to be a great scoop for that stock? Have they done anything? Oh, did the earnings come out good? Are they increasing their comp sales? Were their profit margins up? No, actually, they weren't. The stock had a negative earnings reaction. So that tells you what the asset managers are doing. They're selling it. I would be inclined to short this, but what I don't like is this choppy BS. They love it. They hate it. They love it. They hate it. How are you going to make any sense of that? If you've got a position, you're going to be driving yourself crazy while this thing meanders back and forth. One minute it's going to look great. The next day you come in and you go, what the hell happened? The bottom fell out. Well, that's because that's the nature of the stock. It's just choppy and it's going nowhere right now.
You know, Pete, I found people take this investing mindset into trading. And it makes sense. Okay, you grow up around the idea of stocks or whatever, and it's buy low, sell high, right? And you invest in good companies or companies that that have some fundamentals, and you buy them at a low price. And that's an investing mindset, right? That's the idea behind it. If you pick good companies and you manage to get them at some sort of discount rate, you're doing well, right? If you bought Nvidia at 99, for example, or whatever, uh, you see, you look at that drop that was less than a year ago, and you go, "Oh, Nvidia is a great company. Here are the fundamentals. I'm an investor. I'm going to buy it there." That is not the mindset that goes into trading, right? Because investing on the long term, you might be right. I mean, look, if you think Target is going to recover and isn't going to stay down there that long, and brick and mortar will make a comeback, and blah blah blah, and if there's a recession, people will go to the Targets and the Walmarts more, and you have this thesis in your head, then sure, buy Target. And you just got to be prepared to hold on to it. You're not playing the technicals at that point. You're not playing price action at that point. You're buying low and hoping to get in at a good price. And if it continues to drop, it's fine because you're just going to hold it. You might even add in dollar cost average. But if you're trading, it is a terrible idea to take that investing mindset, that supermarket mentality that I am getting a discount here on this stock, because your trading is short term and you don't know if Target still has another leg down. In fact, as Pete said, it's a choppy stock, but if a gun to my head, it probably is going to continue to drop for a little bit more, um, particularly since it didn't enter that gap. But the moment you try to bring that investing mindset of, oh, this is stock is on sale and it's going to come up, or this stock is too high, it's going to drop. That's where you get into a lot of trouble, and you should be investing, not trading.
And so if you want to buy low, then what you need to find is a stock like Nvidia here, where it looks just as ugly as can be. Trades all the way down to $80. It was at earlier this year in April. Okay, this stock, if you zoom out and look at the weekly chart, that is what tells you, oh, this is a really, really, really strong stock. Asset managers want to be in this name. So when you get the drop as a swing trader, you're still not getting long in here. Downward sloping trend line right here. Now you've got a breakout above the major moving averages. You can buy in here, but you got to be out before earnings right there. Your better play is now you've seen the earnings reaction. The stock is back above all the major moving averages. You've got in here the 50-day moving over the 200-day. You've got a compression. That's a golden cross. This is where you can get long NVIDIA and ride that thing higher. So you're not buying here, you're waiting for that technical confirmation. This is where you're getting long. And that's because you increase your odds. of success. Up in here, I'm in the 80, 90 percentile of being right. In here, I have no freaking clue because there could be another big leg down and now I'm trapped. Now I got a big loss that I'm faced with. So that's how you have to use technical analysis. You're not going to pick the top, you're not going to pick the bottom. You're going to try and take a very high probability piece out of the middle of it, and you're looking for stocks that have been very, very strong on a longer term basis.
Dr. J, you kind of hit the nail on the head here where talk to institutional traders said retail is competing against computers that know everything. Don't try to compete on their terms. The idea here, and what we preach in the foundation of what we preach here, stop competing against the institutions and start riding on their coattails. Stop thinking you know better than them and follow the price. The price action is the institutions. Follow the price action. The trend is your friend. Don't go against the institutions. Go with the institutions. Trust me, they make money. So if you're going to go with the institutions, that's the side you want to be on. You do not want to be competing against them. And Ouija, or however the hell you pronounce it, I see a bunch of news that's negative on the stock, and a day later it pops up. Any chance of manipulation there? Is it just coincidence? Um, you're seeing news and you're assuming it's a breaking news that you're finding out about it at the same time everybody else is finding out about it. And chance that happens every now and then. You'll get some breaking news on something that is a shock, right? And you'll see it in the price action. Everyone will be like, what the fuck just happened? 99% of the time, the news that you're reading on a stock, this product is going to be delayed or whatever, take out FDA reports on a drug that doesn't work or does work. Those generally you'll see in the price action are breaking. But beyond that, most of the news is either
I am
expected
short. Sorry.
or
I am short ES. Just wanted to put that out there.
yep, you put the future in.
Sorry, I
And
didn't want
most
to
of the
do it
news
when
that
it's
you're reading is enough people. The algos are already programmed to assume the probability of that event happening, or they're well aware that it's a 99% chance of it happening. And you'll see that the price action leading up to the news, the stock will drop, the news hits, and then all of a sudden now the stock starts going up. But the drops that you saw for the past 2 months were because of the news that just hit today. So don't go thinking that, oh, everyone just saw this news just like I did and the stock's going up even though it's bad news. That's already priced in. And so get your head wrapped around the idea of what being priced in. So as Pete just said, he just shorted futures. Obviously, we just broke that candle. I assume, Pete, you were looking at the 1220 or the 320 candle on SPY that just broke down.
Yeah, I was watching it just leak lower and finally take out that was support. Now is resistance. 63.97 is where I'm short. And yeah, back to news. Could there be front running? I've seen it. Relative strength picks that up. So let's say there's a brokerage upgrade. Well, guess who knows that there's going to be a brokerage upgrade? The company, the brokerage firm does. So are they in there buying the stock ahead of that upgrade? Heck yeah, of course they are. And then they come out with the upgrade and they probably sell some of that stock off as the stock moves up. So if you're watching, let's say a stock has relative strength and the market's selling off a little bit, that relative strength is telling you they're out there buying that stock. And that's your tell. So if you're always using relative strength, you'll be able to pick up what the institutions are doing oftentimes, even before that news event happens. So, but in general,
Like
other
again,
I was going to say, in general, some of the bigger announcements that a company would make, yeah, that tends to be largely priced in way ahead of time. I'm just kind of talking about the overnight little pops that the stock might get. Yeah, I think there's definitely some front running, and call me skeptical, but I think there is some insider trading going on.
I mean, take the idea of a company joining the S&P 500, right? Whether, let's say, a company like Hood or AppLovin. And a year ago, or some odd, an institution will look at a company like that, look at the financials being reported, and say, okay, this company has an X% chance of joining SPY within the next year, within the next X number of months, and they'll adjust those percentages based on how many boxes it checks off, and so on. And that the moment a company goes into that, right, like Amazon joining the Dow, it gives it an enormous boost to the stock price, because now when that ETF gets bought, that company is getting bought. So just news like that alone. So then the news drops finally that company joins, and you'll get a little pop there from retail, but most of that was already priced in. What you really see the price action response is that when the S&P announces, for example, and the company, like when App was supposed to join and it did not join, and then when that happens, then you get this huge drop, because the idea that was priced in beforehand, all of a sudden now you have people bailing out because the algo and the predictions were wrong on it. So the idea of what's priced in and what's not priced in, you really need to have a very good understanding of that to truly grasp the impact of news. That's why there's so many earnings where it's like, wow, these are great earnings and great guidance, and the stock drops. Like, what the hell? Priced in.
Yeah, and they do revise earnings estimates too. So in the last quarter, we saw lots of downward revisions. And so it was much easier for companies to beat earnings estimates. So just the fact that they beat earnings estimates is not necessarily good news if that bar has been lowered considerably.
Someone keeps asking why I like McDonald's here. Well, I mean, I don't like McDonald's; it's crap food. But uh, I mean, look, if you look at the daily chart, ever since the low on June 26th, McDonald's has done nothing but continue to march upward in a nice, orderly fashion. Actually, nice response on earnings. It's broken through all three SMAs. It had a little trouble with the 100, but then it breaks through the 100 on 814 and then continues to march up. The only hesitation I have in McDonald's is it's a channel that it's in. If you drew a nice trend line here from the top of 7-1, and then you connected it to 7-11 and connected it again to 8-6 and so on, even connecting to 8-19, you come to the top of today's price action. And then you can draw a similar channel on the bottom where you do the ascending from the bottom of 7-8, and then you can just connect it all the way up. It's at the top end of that channel. I mean, if you really want to be conservative about it, you draw that line. I make a right click here. I just set the alert on that trend line there. If McDonald's breaks above it, then sure, I will take it. And then Costco is almost not the same thing, but you had a low on the end of July, and look at this march up. I like stocks that break through three SMAs at once and then just continue upward. That's always good.
And keep in mind, we're talking events. FOMC minutes. That's one of those rare things that gets released in the middle of the day. So when we conclude this at 1 o'clock Central Time, 2 o'clock Eastern Time, everybody's going to be scouring the FOMC minutes. Well, what does that mean? That means that the price action right now is going to be pretty lackluster. You're not going to see a lot of movement because everybody's waiting for that release. So keep that in mind. Adjust your risk accordingly. Know that there's news coming in, and then see what the reaction is.
Dash is a short. Well, if you were in the chat room, and I can't understate the benefit of being in this chat room. If you were in the chat room, you would have seen the members there all over Dash as a short. I still like Dash as a short. It's not breaking through VWAP yet. I would keep an eye on it right here, though. It's at VWAP. I would make sure VWAP holds, and then we get that break of that mini M5 compression. So I'd like to see Dash drop to below 237. Let's call it below 237. I would place an alert on Dash at 237, and if it breaks below that, then I would take it. But again, there were shorts on Dash in the room from opening bell, and people did great on it. So I can't understate the importance of, if you really want to learn how to trade, to be in that room. I can't say much about Fig. What about you, Pete? I mean, these IPO stocks that don't have much history. Someone's asking about, what do we think of Fig right now? What do you think of Fig?
Fig, I'm not even familiar with that. Don't know who they are or what they do. It's putting in a nice day today. Good volume.
No history.
Yeah, there's not really much to go off of. We're technical traders. So the key to technical trading is data. And if you don't have any data, you don't have a large enough sample size to make informed decisions. So for me personally, uh, always the prior day's high is the first line of resistance. I wouldn't touch it if it can't even get through the prior day's high. So till it does that, I'm not even looking at a stock like that.
Do we use market internals like uh, like Vold? I mean, look, there are a lot of different market internals indicators out there, Volt being one. Uh, the, the issue is what do they tell us uh, that price action doesn't tell you? What does it? So you have Volt, for example, right? And it's sort of like uh, the volume. It's basically, I'm trying to put it in a word, but every stock going up, its share volumes added up, and every declining stock, the share volume subtracted, and you get this net, right? So if Volt's positive, there's more trade and volume going to stocks that are going up. If Volt's negative, there's more volume going to stocks going down. Well, no shit, Sherlock. I can look at SPY and say, I'm pretty sure uh, that that there's more trading volume in stocks going down today. But beyond that, I don't have to do that, because I can just take a look at any market watch. I can take a look at it on Option Stalker. I can take a look at it anywhere and figure out what percent of the stocks are going up and down. Vold, or on balance, you can use on balance volume for an individual stock. It doesn't really tell me much that the overall SPY volume doesn't tell me. But, to each their own.
When you talk about market breadth, the rally that we've had over the last couple of years has been largely led by a dozen stocks. It's pretty incredible. So when you look longer term, I know you're talking about intraday for market timing and such, but on a longer term basis, those dozen stocks are accounting for well over 50% of the gains. It's pretty incredible.
It's insane. Nvidia is like what, 10% or 8% of the entire S&P index. It's It makes it kind
That
of hard for the
that
index to go up when Nvidia is down.
well, that's also why it's, as you pointed out, a very important earnings announcement that's coming up next week. That will be the big news next week.
Yeah. I mean, you can look at the unbalanced SPY, right? And you can see the differences there. Obviously, we live in an environment where it's a very top heavy market. We live in an environment where if the Mag 7 is doing well, you can literally have almost everything else not doing well and still put in a bullish day. Whereas you could have something where 300, 400 stocks in the S&P are green for the day, but the Mag 7 is not doing well at all, and you'll have a bearish day. No one's arguing that there isn't this lopsided imbalance, heavy weighting, very top heavy. But when you say it like that, it's like, oh, well, that's bad. But if you think about it, Nvidia is tied into how many companies, right? How many companies fall under that and depend on in a symbiotic way that relationship with Nvidia. And then you add in Amazon and Google and Meta, right? So it's actually not as crazy as it sounds to have that level of imbalance, because as Nvidia goes, as Google goes, as Amazon goes, they're almost like their own epicenter in themselves. We trade based on SPY because the market has a gravitational pull, right? And so SPY goes up, 75% of all stocks, whether they're in SPY or not, go up, right? It's like a rising tide lifts all ships. And then you look for the relative strength, the relative weakness. We've gone over this. But sometimes that's like the sun in a solar system, but sometimes you have a stock like Nvidia that's like Jupiter, that has its own strong gravitational pull itself. Whereas Nvidia is doing bad, a lot of the stocks in that sector might get dragged down with it. So there are these kind of mini spies, if you will, because of that imbalance.
What are our thoughts on Microsoft? Microsoft has been such a strong stock. You don't see it put in that type of price action very often. So this is a breakout to a new high. Now you can see how this breakout, we're back below it. That is a failed breakout. Stock is testing the 50-day moving average. It's relative weak. If it breaks through the 50-day moving average, then you'll have a nice shorting opportunity in here. It's a little away from the EMA 8, but not bad. So I would be more bearish than bullish on Microsoft right now, but you've got to wait and see what happens. Technically, you got to wait and see what happens on Friday. I hate to give you this mealy mouth answer. This is super, super tight price action. These are buyers in here buying every little supply that comes in. So I'm going to give this some consideration. I'm not looking for the stock just to roll over and all of a sudden crater because I don't know why. Well, why? What happened? What happened to the company? So, no, it's going to take some market selling to get this stock to sell off. And in fact, I think all the big tech names will probably move pretty much in tandem. Nvidia, Google, Meta, Microsoft, when everybody decides that the macro backdrop for the market has soured and that these valuations are relatively expensive and that these tech giants who have rallied the market to a new all-time high, that it's time to take some profits on it, then you're going to see them all kind of roll over and start taking out some of these moving averages with ease. So hold off on Microsoft, wait to see what the news is, how it comes out next week. Let that EMA 8 come down and then watch for that crack below the 50-day moving average.
I'm looking for, what this might start. We might start be getting into a decent time for if this drop doesn't have legs. So, obviously if this drop has legs, then we're talking about something else. But let's just say Friday comes and goes and, we're not dropping below 630 on SPY here. This might be, particularly once we clear Nvidia earnings, this might be a good time to start looking at some bullish put spreads on some of these stocks here, right? So, I'm looking at the Googles of the world, or even the Teslas. You take a Tesla right now to do a bullish put spread on Tesla, and you'd want to look at where some good support is. So obviously you have the 50 SMA at 321 and the 100 SMA at 306. So I'd be looking for a 305, 300 bullish put spread on Tesla to see where I could get that. And I could get that actually probably on September 5th, where I could sell the 305s, buy the 300s. I can even do that's $1.20 credit right there. I can even do it if I could do this for next week, that would be insane. Yeah, I could pretty much get that for next week, August 29th. You can do a 305, 300 bullish put spread on Tesla for right now. It's going for 93 cents. You put that in, you get any more of a drop, you'll get it. Uh, I don't know. What do you think of that bullish put spread, Pete? 305, 300 expiring next week on Tesla for a dollar.
Yeah, I mean, the stock has been trapped in this horizontal range. It hasn't gone anywhere. So I don't feel like you're chasing a stock like on some of these tech stocks that are making new high, new high, new high, like Microsoft. Okay, well, that's got, some room for some profit taking. I don't think Tesla's been in that same camp. It's just kind of been trapped in this horizontal trading range, and you've got nice option implied volatilities. You're the statistician, so from an odds standpoint, it makes sense to me.
I mean, it's got to break. It's 50, it's 100. It's got to go all the way down to 300 all within the next week. And you're getting a dollar, you're getting a 25% ROI on the trade. It's something to consider.
Well, and I am still long Tesla, so I've got a little bias there. I'm looking to get out of this thing.
Yep.
I feel it's got probably a equal chance of moving higher or lower from here. So if the market regains its strength in here, I'm going to be bailing out of it because I don't typically like to be in a stock that's got this kind of choppy back and forth sideways action. I want something much more uh, concrete. If I'm selling premium, then this is fine actually. But if I'm trading directionally like I'm long shares, then I'd rather have a nice full head of steam and a nice strong trend.
Yeah, blah, blah. I'm 100% certain that if you did it right with a $5,000 account, you could be profitable. You probably missed it, but I literally just said my son is doing exactly that. Not only did I do challenges with that amount and have it recorded, but my son started with like 5,500 or something in his Thinkorswim account, and as a part-time job, he's up to almost an 80% return on his account just over the summer. And by the way, I have been posting all of his trades in the OneOption chat room. So he's had like 15 straight profitable trades. But he's a 20-year-old and learned trading and does it for like an hour a day, and has been managed to almost double his $5,000 account as a summer job. So yeah, I'm pretty sure that if you do it right, you could make money. You just have to do it right. That's always the key, right? Doing things right.
Someone had mentioned that they're not in chat rooms because they're distracting. I've never been in a chat room. I have a chat room, but I've never been in one. But I would tend to agree with that because you have a lot of people posting random ideas and you don't know what the basis for their trade was. You don't know if they're any good. Are you a good trader? Are you a bad trader? There's no track record. Of course, you're always going to have the guy who comes in and says, I bought PLTR puts yesterday and I made 500%. Well, you didn't post the entry. So, what I've done, and if I thought about what I'd want as a chat room, it's following a system, making sure that the trades that are posted in the chat room conform to that system. You have to post entries and exits on a timely basis. And so there's accountability in the chat room, and there's no memes being posted. There's not a bunch of BS. It's laser focused. It's just trading. So yeah, I'm giving my chat room a plug here, but that's what I would want. It's a community where you can come in, get really sound trade ideas, look at a stock symbol that's been posted. If you understand the system that we trade, you understand the basis for the trade. And as a poster, that means that I don't have to spend a half an hour writing a dissertation on why I'm long or short. I just post a symbol, I'm in, and it makes it easy for other members to go in, dissect the trade, and analyze
And if you post a crappy trade, I personally rip you a new one. So there's always that,
it. There is that.
which is always
Uh,
fun. There,
we
there,
haven't
there is
given
that. But
a
I mean, we don't really tolerate crap trades.
we haven't talked about any longs. I mean, I have loved BE. I still like BE, and so I think that might be my long. I know I've mentioned it in some of my videos, but there's the earnings announcement. You can see a compression after the earnings announcement and how the stock is continuing to move higher. Yesterday, anything that has run higher was taken behind the shed and it got beaten up badly. If this stock were going to sell off, you would have seen it really drop, but it's preserved its relative strength very nicely. This morning, you had that huge market drop. Look what the stock did this morning. Yeah, sure, it dropped with the market a little bit, but then before the market even found support, this stock was racing higher. Look at that relative strength and that volume. I like BE.
I like Costco long and Apple short.
All right, Costco. Yeah, that
Those are
was
my two
nice. I
picks.
like that breakout. Yep. You could see how this stock, yeah, just raced higher this morning on those stacked green candles, big volume, never gave up the gains, even with the market down. Looks like a good one to me, too. And recap
Yeah,
here.
and for stocks like
We're going to have
Costco,
to,
you do a call debit spread.
and let's see, I'm short futures at 63.97 and it's currently at 64.04. So I'm down about 7 S&P points. I'm going to close this trade down for a small loss because I don't want to be out there with this risk exposure ahead of the FOMC minutes. And the market didn't do what I wanted, which I wanted it to continue to drift lower and I wanted it to take out VWAP with ease. So I'll continue to watch it in here when we conclude the live event. And if I don't get it in the next 10 minutes, 15 minutes at most, I'm going to be out of that. I'm going to be looking to exit this and perhaps even scratch it and just wait and see how the FOMC minutes come out. Friday's news is going to be big. It's going to be 30 minutes after the open. Powell's going to speak. The Fed is in recess, and everybody is counting on that rate cut in September. And if he says anything that even remotely sounds like they might be postponing it, the market is not going to like that. If he comes out and says, yes, it's likely, then it's probably we're going to continue to see the market float right back up. Any closing comments, Harry?
I mean, I like how you actually close that trade for a small loss. I mean, one of my favorite titles of a book, Tom Houligard's "Best Loser Wins." Even though I pat myself on the back, I beat Houligard's profit in 2024. But uh, "Best Loser Wins" is one of the best advice that you can get as a trader. It's not just about taking the profit and obviously adding to winners and all that, but it's taking the small losses and knowing when to get back in and knowing when to cut your losses. That's always going to put you ahead of a lot of traders. And deja vu mactical, I don't fucking know. The 5K challenge, yeah, you only have 3 day trades. That'll change soon. You want to swing. You're obviously focusing on swing trading with a small account. Most of your trades are going to be swing trades. You're not, there's going to be the occasional time where, let's say you short PTLR and it drops $15 and you want to close the trade at the end of the day and take your $1,500 profit per contract, and you have like 2 contracts. Yeah, you almost doubled your account in one trade. You don't want to risk it. But most of your trades, 95% of your trades, are going to be swing trades. So that's what you're focused on. And there's a whole set of rules written in the system and in the wiki as to what you need to do to swing trade. So just keep in mind, everything you hear us saying, Pete and I have written down. We have written down, we have outlined, we have put into, very easy to follow guides for you to read. So I would take the time to read those things.
And there's a chance that they might change the PDT rules. They're talking about it right now.
Yep.
We'll see if that actually happens. So that would open things up considerably for other traders. But I'll also say that I think most traders should start out swing trading because there's a lot more room for error. You're not looking to be right immediately. You don't have to be right immediately. You can let the trade breathe a little bit and play out over the course of a week or 2 weeks. As you start really refining your trading skills and shortening your trade duration, that's when you get into day trading. And that's when precision is super, super important.
If you can't make money swing trading, you're not going to make money day trading.
All right, everyone. Thank you so much for attending. We got the FOMC minutes in about a half an hour. Good luck with your trading on Friday. Let's see which way we go. Thank you, Harry. We'll see you
Good luck,
soon.
Heather. See you, Pete. Bye, everyone.